Let's talk about commodities now, where we have seen a bit of a rebound coming in. The data coming in from US continues to be positive. So does the corporate earnings, and the dollar index has declined to 1-month lows, and that's working in turn good for most of those commodity buying strategies. So there you have the gold prices holding around 1750. Remember, we have seen 1729 kind of levels for them as well. And there is a bit of a rebound coming in case of the base metals as well, where copper is off its 1-month lows, and so is the crude prices. But how do you trade all of those commodities for today? For that, let's go across to Kishore Narne. He's Senior VP, Anand Rathi Commodities, and he joins us live on the show. Kishore, hi, welcome. Let's start with the precious metal space first. And we have seen a correction come in the previous week on Monday as well. But since yesterday, there has been this buying coming in. Does it look sustainable to you?
Not very well. I think probably we have seen just a technical bounce back right now. Again, a lot depends on how the European situation turns out over the weekend. I think if there is any good news from Europe, then probably in dollar terms you might see a slight incremental demand for gold on the ETFs or on the investment side, which will take it to again 1780 kind of a levels in short term. But again, similar news again will have a positive impact on euro as well as the Indian rupee against the dollar. So that would take off a lot of that steam from the Indian commodity market. So I think, yes, in short term, probably we can expect a slight bounce back in domestic gold also. So one can use it 31,000 as a stop loss and can buy right now and hold for a couple of ₹100 rally, but not a significant upside possible at this point of time.
Kishore, how are you getting into the festival of Diwali on your gold and silver positions there? I mean, a lot of people would be buying as the festival and the wedding season as well starts. What's your advice to physical buyers as well?
See, we've been maintaining this view for the last 6-8 months that for the entire this calendar year itself, gold will not be moving in a major move, especially on the domestic markets. I think we have seen a sharp slide in the demand for physical gold, especially on the jewelry front as well as on the investment side also. So I think going into Diwali, I don't see any major move coming up. Again, we would stick to that the range of around 10% from the current levels, maybe on the lower side 28,800 is possible. Again, our call is largely based on a rupee appreciating against dollar over the next medium term. So as we expect the rupee to go down to around 48 rupees per dollar by March, so that would have a significant downward pressure on gold prices in India.
How about silver, Kishore? Because that really has been moving quite choppily. We've seen nearly 18% of gains coming in for this year. How do you see that one performing?
Again, as you've been mentioning about the copper prices, I think that is having a significant impact here also. And on domestic front as well as the international front, I think we believe that silver will be underperforming gold. And on the lower side, it could reach around 58,000 in short term, but over a medium term, we could be seeing 52,000 to 53,000 as a levels if you see the 3 to 4 months kind of a perspective. But absolutely for the day, probably even here we would like to buy. Again, this is on a slight technical bounce back. One can look for targets close to 60,600, 700 kind of levels. Again, 60,000 would be holding as a stop loss for the day.
Kishore, what's your sense coming in for the crude prices? I mean, it's really turned around for both of them. While the Brent crude prices are up 7% in this year, the NYMEX crude is down. NYMEX is down 7% for this year. How do you read the kind of premium that Brent has been carrying for the whole of this year?
I think there is a lot of perceived risk premium which is built in Brent, especially currently with the spread going to around $24 per barrel. A lot of news or a lot of factors which could be possibly go wrong in the Middle East are already factored in. So probably I'm expecting it might go up further, maybe $25, $26 could be a near-term top. But at the same time, that has nothing to do with the overall macro direction of crude. One, yes, we agree that the demand side fundamentals are weak, but at the same time, the current fall which been there almost more than 15% fall from the top cannot be justified just by the weakness in the demand fundamentals. So I think we should be seeing a decent pullback towards $96, $97 on WTI. Again, in India, it would be turning out around 5,000 to 5,070 kind of levels. So again, short term, yes, we are buying now, but our medium term, we remain that it would be range bound between 5,100, 5,200 on the higher side and 4,600 to 4,700 on the lower side on the Indian markets.
You mentioned about the base metals and copper especially. I mean, we haven't seen much stimulus coming from China, and market really seems to be giving up that hope as well. But even saying that, copper is up nearly 7% for this year. Do you see a positive closing for this year now?
Yes, I think it would be closing somewhere close to that 8,100 to 200 mark on the dollar front. But again, on the domestic front, it should be under pressure. I think we have been seeing this market moving in a narrow band of around 25-30 rupees for the last 3 months or so. So I think that range will continue to be there in the next couple of months as well. So any rally towards 436, 437 should be seen as a selling opportunity at this point of time. But again, if there is a stimulus announcement from China, that could spur a short-term rally in copper.
Well, that's about the non-agro commodities. Let's touch upon agro now, and we have seen a lot of choppiness into that one as well, Kishore. I mean, monsoon was all about prices running up and down there, but how do you look at the chana prices now? I mean, we've seen all-time highs of around 5,000 plus kind of levels onto that one. This correction, do you think, can go on the lower side?
Yes, I think probably we might see another 100-150 rupees downside pressure in China. Again, here in short term, we still see some kind of a supply constraints because we are yet to go into the Rabi season. But again, as we have been importing a lot of China and all the other pulses as well, so we have a comfortable inventory situation. And also at this point of time, once the rupee start to strengthen further, again that would be having a downward pressure on China. But again, I'm not saying that it will be falling significantly before this expiry. Possibly towards 4,700 is possible. But anyway, if you're looking at the forward months, anyway they are trading lower to the current level. So I think that's already priced in.
Well, another commodity which did see record highs was the edible oil space, even refined soy oil. The international commodities also have run up, and there's been lots happening in the Malaysian palm oil prices recently. You also had the import data come in yesterday, the USDA report as well to react into this week. What are you picking up from all of that?
I think the fall which we have seen in the edible oil markets again has been drastic because it followed a significant rally before that. Again, the markets right now are discounting a significant jump in South American crop, which could be possible. Yes, again, domestic crop is coming up for the harvest, but despite that, I think short term we are expecting a bounce back. On seaboard, $15 should be seen as a good support at this point of time. So you might see a $1.50 rally in international market. So in India, I think we are looking at 670, 675 possible targets for refined soya November contract. So one can buy with a stop loss of 640 even at current levels.